Hi, it's Michael Kerr here, presenting Small Business Banter. Welcome to the Small Business Banter podcast. I'm Michael Kerr, your host, and I'm also the founder of Kerr Capital, where I work day to day with business owners. The Small Business Banter podcast is built just for business owners and will be especially relevant if you're an owner looking to sell, if you've been unexpectedly approached by a potential buyer, or if you're an aspiring owner about to buy a new business. There's a lot on the line personally and financially. It's stressful, it's emotional, and it's usually new territory. So to help, each episode of Small Business Banter is a discussion between me and another business owner or an experienced small business advisor. We talk about their experiences. So what you'll get is practical, real-life advice, different takes on everyday problems, and a renewed confidence to tackle your own business challenges. So welcome into, I think, edition 142 of Small Business Banter podcast. I'll have to check on that, but welcome in Ken Matthews today.
Thank you, Michael. Welcome to you.
The reason you and I, we've known each other for a fairly long period of time. I'm going to get you to tell your brief story in a minute, but Ken is the founder of Matthews Steers, which is a Melbourne-based or Victorian-based financial services group. Started as an accounting group, but really broadened out, much more to focus on, family businesses particularly. So, Ken, thanks for taking time to come in and chat on Small Business Banter podcast. Do you want to kind of just set the scene with your brief history? It's not a brief history, but a couple of minutes on you and Matthews Steer, and then we'll delve into some of your experiences working with business owners closely to help them get set to sell, and also your own exciting news of the last few years, where you also went through some mergers and acquisitions, and have really redeveloped your business as as a much bigger, broader financial services platform, looking for your own acquisitions to grow. So over to you, Ken.
Well, thank you, Michael. I think we first met at EO, Entrepreneurs Organisation, going back quite a few years ago. And I suppose that's probably where I started, was in the garage at home in East Keilor as an entrepreneur, really starting from scratch. And then, taking in Jeff Steer as a partner in 1990. And then we had a vision to basically grow a mid-tier firm in the northwest of Melbourne, which we've done over, 33 years. It's now, we've got 50 people, 4 in the Philippines. And as you said, not just accounting and tax, but we do business advisory. We have a large private wealth financial planning division. And we also, which is interesting, which is a bit different, we have an innovation and grants team. So we're doing R&D and export marketing and capital grants. So, even though we're an accounting firm, we've actually got 3 PhDs working for us doing R&D claims, which is a bit
more like a lab.
We've actually got them based in a lab, sort of a lab at Melbourne Connect in 700 Swanson Street, part of Melbourne Uni, which is fantastic site. So that's sort of what our journey's been. It's been a great journey. I wouldn't have swapped it for anything.
Yeah. It we'll get into in a lot more detail. But when you began in the garage, you had in mind at that time to grow a successful accounting firm. Was that kind of where you saw it then, or did you have eyes on a bigger play, 33 years down the line?
Oh no, we'd never envisaged it would be as big as what it is now. But when I started, I came from an accounting firm over in Ivanhoe, and I saw the quality of that firm in Ivanhoe, and I didn't think there was really much in the northwest of Melbourne that could service businesses in particular the west of Melbourne, and I wanted to provide that service. And taking in Jeff Steer from Arthur Anderson's, I mean, Jeff was a senior tax manager. We were, and I did a postgrad in accounting. We were delivering pretty high end, tax and accounting advice even back in 1990. And so we sort of had, our vision was to create a business of the size and scale that gave all of our people the opportunity to grow, and also have the service offerings to our clients so that they could grow and thrive. And we I'll come back to this later. I mean, we're of the view that you do need scale in the financial services sector now.
Yeah. The clients you were referring to then, did you take an early focus on business vis-a-vis, individuals? Like, was that an early...
Look, I have a philosophy that I picked up from one of the chaps through EO. You go through
EO, by the way, is the Entrepreneurs Organisation.
Yeah. Well, you go through 3 stages of growth. Yeah. The first stage is sales driven. I mean, you take everything that comes through the door, and we were no different, right? Yeah. So we took salaries and wages. We took, we were capable of doing high end, property developers, manufacturing at that time, just from both our backgrounds. But we then realised that, doing $50 salaries and wages returns was clogging us up. And we had to make a decision to simplify the business. So, one of the first things we did was to let those go and focus on the, more substantial clients. So you start off at that sales-driven mode where it's like a family environment. Everyone knows everyone. You do everything, yeah? And then you move into a more of an operational mode where the CEO, appointing a CEO was a big deal. I mean, because it was originally Jeff and I, we made all the decisions. Actually, for me, being appointed CEO was a pretty big decision at the time. And then I delegated a lot down to an office manager who then became a general manager. And then, you have divisions and you have proper systems and processes that you don't have when you're in a garage at home or in a small environment. And then you get into this sort of the third stage, which is the transformational stage, which you do need external help, and you need to surround yourself by really good people, which we're able to do.
Yeah, it sounds like for you to step out and become a CEO, just purely in a fast-growing or well-established accounting firm, to establish that kind of position is a real statement about where you're going to be off the tools and focusing on the business, the accounting firm, the business, as opposed to just clients day to day. That's quite a significant setup for what you just described then, which is a base for innovation, because you're running it like a business as opposed to a practice where you're in it.
Well, we established a company board 20 years ago. So we were one of the first accounting firms to do that. So we ran it as a business, a company where a lot of businesses and accounting practices more so run as a partnership where, your worth is how much fees you generate as a partner. It is a significant step, and it's not an easy step for any entrepreneur to let go, to put in place, office managers and HR managers and to then focus on your people, growing your people, but also getting in front of your referral partners and bringing in the work. Yeah. So you get to a stage where, someone has to, focus on actually running the business, and that's that sort of probably the operational stage, the second stage, I think, of a business development. The third stage is probably you then need a board around you, an advisory board around you, and good people and mentors around you to help you, because you don't know everything. I mean, it's a long process of trying to, understand what the opportunities are, and also the weaknesses and threats that you've got in your business.
Which I imagine, being a CEO as opposed to a partner focused on producing more fees, it does become a bit clearer that you've got an eye across the business rather than just on your day-to-day activities. So it sounds to me like it's a huge investment to step away to create this organisational structure that is about setting up for future growth. I'm sure there were trade-offs along the way that you'd want to ensure that you get the right return on later. But it was innovative for sure.
Well, it was scary, I can tell you, because when we did it, the fees dropped, because you're off the tools, you're not generating enough. So it's actually, one of my very good friends explained it to me, who helped us do our strategic plan, and at the time, and he said, "Look, it's a hockey stick. You do take a hit, but then it's just accelerated growth." Because you're growing, you're actually getting off the tools and doing the work that can be delegated down to young up-and-coming people, and giving them an opportunity to become associates and partners within the business. And that's where you get this hockey stick effect and accelerated growth. But I can tell you, it's not, unless you've been through it, it's really difficult to explain to people, and it is quite frightening, I can tell you.
Well, there's a couple of attributes that there's. One is just letting go, and handing over responsibility, and believing in people that they're going to grow and do the job at a level that you're happy with. But as you say, the financial hit, like I think there's a lot of businesses out there, accounting firms, all sorts of businesses that are in that middle phase where they're just about sales and what can I create today, and that's fine if that's what you want to do. But when they stop, the business stops.
That's right, and there's probably no value in them.
Not a lot of value.
There's not a lot of value. So you basically, it's just the goodwill is the person. You take the person out of it. There's not a lot of value. So if you can actually step back, a CEO is replaceable. Partners are hard to replace. Believe it or not.
And if you're in a mode where you're driving and working hard, collecting more fees along the way, and you bank them and do something else with the money, that I think that's it's certainly a pathway, a legitimate model for some. But what we're saying here is you've early days seen the opportunity, and it might be a good time now to talk about where the business is at now and what you've been through in the last few years, because that is really the result of work that started way back in the garage and continued on through that phase of stepping aside and becoming CEO. So where is the business today, and what happened in the last year?
If I could just maybe step back one step before that. We were approached at least twice before we actually did a transaction 3.5 years ago. And I think that they were great. Look, they're disruptive to your business. In one case, we were, 12 months talking to someone, listed entity. But we learnt so much about them. We learnt so much about the market. We learnt so much about ourselves, because they actually put this, a microscope over us. So we knew, what our weaknesses were and where opportunities were. And when someone actually values you, that's when it hits home to you. One, is it the opportunity, or are you leaving too much on the table? So those twice had happened to us.
They came to you.
Yeah, they approached us. Yeah, they approached us. And it's quite humbling when you get a phone call from someone and they say, look, are you interested? And my comment is, we're always interested for the right buyer. But, you've got to get through a number of gates before it's the right deal. And, probably the biggest gate for us was the cultural fit with the organisation that we were. So having those two experiences prior to the phone call we got from, we were part of Macquarie Van Network, which is a boutique organisation with Macquarie Bank. And, our contact there said, look, we've had a phone call from Paul Barrett from AZNGA. And I said, well, who in the hell's Paul Barrett? And I've never heard of AZNGA. And they did their research and come back and they said, Ken, we think you should talk to them. And we ended up having a breakfast. I had a chairman of my board, Graham Billings, who was ex-partner at PwC. Him and I met with Paul Barrett and Barry McGee, who was the general manager of accounting at the time. And you just connected at the breakfast. And the connection was that we had a clear vision of where we were going as a business. We prepared a strategic plan 3 years earlier, and we realised through the work we did with Macquarie Van and our own research that we had to get scale. After the Hayne Commission into the banking sector and financial planning, we just realised that we needed to be bigger, to be able to have the resources, to be able to attract and retain people, and the service offering for our clients going forward. So that was very clear in our and how we were going to do that. And one of the ways was through acquisition and to build this innovation and grants area. They were two of the areas that we wanted to do. Now, Paul Barrett's vision is to effectively take a strategic interest in accounting firms and financial planning firms and basically support you to grow. So, we don't have to deal with banks anymore. If I find a target business that I need to do, provided it's a proper business case, they'll back us.
Yeah, okay.
Now, there's a lot of work to do to get to that, I can tell you. But, they've done, over 100 acquisitions. So having that comfort that you're dealing with people that know what they're doing, it gives the shareholders and partners at Matthew Steer a lot of comfort that we're not going to get ourselves into trouble, which we did. 15 years ago, we bought an accounting practice and, it was a mistake. Completely mucked it up. So.
Yeah. Was it culture or was it just a whole bunch of things?
Yeah, it was a cult. The guy was a lovely guy. But, we thought it was only a small, it was really a tuck-in type business. And we thought, this will be easy. Well, it's a bloody nightmare. All the staff left and the quality of his clients compared to ours was dramatic.
Yeah.
And, we couldn't believe just how his clients treated him. It was terrible. And we couldn't have that, that treatment with our staff. It was just terrible. So he's a lovely guy. We probably, he's a good person, but, culturally when he came in, he realised he was out of his depth, unfortunately.
Yeah.
And left.
I understand deeply why, culture's, so important in a people business. It's people internally as staff and people as clients. And, so that beyond numbers and synergies and, there's got to be a, the new merged or bigger organisation's got to have compatibility around, vision and, the way things are done and, the type of people that are, that work in the organisation and that you want to have stay there for a long time. It was just interested. You had a couple of approaches. The third one came along, Paul Barrett, and you had this acquisition that didn't go so well 15 years earlier. So by the time Paul came around, you'd probably be in a position where you were able to make a really informed assessment that this is a good move because you've looked closely at a couple of others, and that's invaluable. Although it can be a costly investment of time and money.
It was very time consuming, those two. And the final one was it took us 6 months to do the transaction, and but we were ready. I mean, our numbers were fantastic. I mean, from a preparation, going through the two transactions or potential transactions prior, we were ready. We knew what to expect in due diligence. We knew what a term sheet looked like. We knew what contracts looked like. So we made sure we had competent advisors supporting us and good lawyers, which was really important as well. But, it's funny, the numbers are the numbers. I mean, you'll get a range. I mean, you've then got to be able to articulate, where you're heading as a business to get an uplift. Yeah. And we were fortunate we were able to do that. And we got a good deal, and it's proven a good deal for AZNGA as well as Matthew Steer.
Yeah. And it sounded like there was you and the chairman went to breakfast, and sounds like immediately there was a sense that this is a real opportunity. Was that fair to say? It happened quite. You got that connection feeling.
Yeah, so we were very comfortable with the two guys that we met. Barry McGee was a third generation accountant from West Wyong in New South Wales. I mean, he, lovely guy. Paul Barrett, we connected with as well. And over the 6 months in the due diligence, I got to know Paul really well. The thing that you've got to look for is consistency. What they say they'll do, and that's what we got. And so other transactions that I've looked at, if there's any inconsistency, I'll walk away. I'm just not interested in dealing with people that are not consistent. I'm not saying they're dishonest or whatever. It's just if you've got problems that initially, you're going to have problems if it's later on down the track. And I can say that we didn't have any. Oh, look, we had issues. I mean, we had, in terms of you're always doing a transaction, but our advisors were fantastic in working our way through that. So
this organisation had a track record of doing lots of other acquisitions. Yeah. So that's where consistency comes. You can see that because they've done it before, and you've been through a few dances yourself, and so it's not like first time for either of you.
And I really do think that to get to maximise the value of your business, you need to do a couple of. I think you need to at least be ready. And we were ready. I mean, we were absolutely ready, investor ready. But we weren't looking at that time. We were on a growth phase, and basically what this enabled us to do was to de-risk ourselves. We were able to take some money off the wheel, which was important. We've got young partners in the business, young shareholders. It enabled us to have a shareholders agreement that if something happened to me, my wife got a cheque on an agreed formula. Yeah. That was worth a lot to us.
Yeah.
And young partners coming in, they funded them. They were able to effectively organise with the bank for them to buy in. So, a lot of the issues we had were taken away from us in terms of we just had to focus then on the business and growth.
And it sounds like you personally and probably, at least you personally still had runway. You were excited about, you didn't need to sell out at that time totally and go, play golf or whatever you do. You sounded like to me you had runway, and, that they painted a vision that you could be, stay involved in a really exciting, innovative, growth-orientated practice.
They basically backed our strategic plan. That's what they did. And they said, Ken, we want you to help deliver it and execute it. So, I mean, we sold out 51%, right, effectively. And someone says to you, we're going to back you to double it. geez, I mean, that's a pretty exciting proposition.
Hi there, it's just a quick interruption to the podcast, and it's a message from Kerr Capital, a supporter of the podcast. If you're a business owner thinking about selling and you're unsure about what you should do, well, the worst thing you can do is jump straight into an unprepared business sale. Cross your fingers and hope for the best. If you want to take control, get a sense of what your business is really worth and a plan to make it more sellable, then head over onto the Kerr Capital website. Check out the value and sellability diagnostic. If it piques your interest, contact me, Michael Kerr, or book one of the free 45-minute diagnostic calls. Now let's head back to the podcast. I'd love to get to kind of parlay into a chat about your, as a an advisor to small business owners as well. Let's talk about what you'd advise them to do based on your own experience. But yeah, it's this pathway. There's a total. You can sell out your business, and then you can enter these joint ownerships, shared ownership models where you're still involved. And I think the level of complexity there, the upside when you get the two good partners, one with all the capital or the experience, you with your infrastructure, 1 and 1 equals 7. But you are then you're no longer the sole owner, and you're no longer exited and free to do whatever you want. You're in a partnership. I mean, it's not a formal partnership, but you're working with another organisation. So that's that. I think there's a lot of opportunities for owners out there to consider something like that, because a lot of businesses do have potential. They don't have the capital, the know-how, the people. That there's a range of constraints on them to achieving that. Selling's kind of, they feel like they're going to get shortchanged because there's so much potential. But if you can't do it and you can't, it's hard to get value for it. So it does open up the world of bringing in a shareholder, but it's enormously tricky. You've been heavily involved with Family Business Australia, and as an advisor day to day to other significant SMEs or private businesses. So, what are your reflections on your own experience that you put into practice with clients now about getting them ready to sell?
Well, we've got a couple of projects on the go at the moment where we're doing a strategic plan as the first step. So we go in as part of we do a deep dive into the client. From a financial perspective, we look at their last 3 years' accounts and really do a deep dive, and we run it through a program we have called a financial canvas. Throws out all their KPIs, calculates free cash flow, which a lot of people don't do. And at the end of the day, if someone's buying your business, they're going to look at what cash is actually generated from that business to be able to see, well, how can we pay the debt back, and what's our return? So we take the clients down that process, and we do a strategic plan which gives them actions, accountabilities, and timelines, and that we then usually, most likely, go on to an advisory committee or board, and we hold them accountable on a quarterly basis, and we drive those actions and hold them accountable. What we find is that a lot of people, we see a lot of family businesses in particular that they've got lazy balance sheets. They've got, because they're making good money, and the family's doing very well, they don't push the business as hard as they need to. So their inventory could be too high, their debtors could be too high, or even their pricing's probably hasn't been looked at for quite a while. So they're the sorts of things that we look at, and we put structure and corporate governance into a business and give them a vision. Where are they now, and where do they want to take it? And a lot of the times they're just treading water. they're we've got one at the moment. The father, is not well. He's the founder, and the kids are in the business. They've got 3 kids in the business. The amount of work they're all doing is ridiculous. I mean, he's burning his family out as well. And, we need to restructure that business. He needs to put in a general manager, and he needs to step down as CEO and become chairman of his board. I mean, he's in his late 70s. He's not well. That's some of the things we do. So we get them ready by actually giving them strategic focus and putting in place systems and processes that will drive them.
Is this the owners of the businesses that are your clients coming to you saying, "I'm not sure what to do," or "I've been approached," or where's it seeded that they start to work with you to go through a very proactive plan?
It's what usually happens. They get to a size where what they've been doing in the past is no longer working. Yep. So communications is a big issue usually in a lot of businesses. The communications are breaking down. They've got to a size where, they don't know every client. They don't know every customer. So they need to actually become a more sophisticated business, to run it, more professionally. And they don't know how to do it. That's why they come to us to, cut through that barrier.
So is it the triggers could range from, I know there's more in the business, to I don't have a succession plan. I'm a bit concerned that, what happens if something happens. But I imagine being close to them as the advisor, that you start to have those more intimate conversations.
Well, I can think of 2 or 3 situations at the moment that we're having those discussions. We're putting in an advisory board at the moment because they're concerned if something happens to them, what happens to the business? Yeah. And at least if you've got an advisory board there, you can then go and find a CEO to replace them, or there's some accountability there, there's some structure there, which doesn't exist at the moment. So that actually happens quite a bit, that they're concerned about. The other issue is this: well, who's going to take over? And we're having those discussions with a number of family businesses at the moment. I mean, the businesses are too good to sell, believe it or not. They're making really good money.
Yeah.
An option is to sell it in one case. But
on terms that are acceptable.
Acceptable. And the family's saying, well, why don't we continue just to work it for another 5 years?
Yeah.
And that's what they're doing. But they need proper structure.
And to be ready, because I think there's a lot of activity that I'm a part of now, which is these unexpected approaches. And so, this idea of it's a linear thing. I'm at a certain age, at a certain stage, I'm gonna get the business ready to sell in 3 years' time. That's one pathway, but if you've got a good business, the probability that someone is going to knock on your door in any industry, because a bigger competitor or someone else in the supply chain they know who's going well, that probability increases all the time. Being actively ready. I do want to just go through that some more, but I also wanted to just reintroduce. I'm chatting with Ken Matthews today on Small Business Banter podcast. Ken's still the founding partner and CEO of Matthews Steer.
No, I'm not. I've stepped down as CEO a couple of weeks ago.
Yeah, yes.
So I've got David Reed's now the CEO of Matthews Steer.
Okay. So sorry, David.
Sorry to pull you up. It's only happened a couple of weeks ago, 3 weeks ago.
Yeah. For sure. Now that's we've got to get all the facts right. We've had this in the planning for a little while, so yeah.
Yeah.
But yeah, that's I'm fascinated with this. I think somewhere in the notes you talked about the level of unpreparedness for sale, or the issues around businesses transitioning to new ownership and the risk that is there for the owners of those businesses, and more broadly the economy, if we don't have a good pathway to transition good businesses from one owner to the other.
Yeah, you're talking about this baby boomer tsunami that's happening with businesses generally across Australia. I mean, you've got a lot of baby boomers into their 70s now, late 60s into their 70s, and the businesses, unfortunately, are, in a lot of cases, are just unsaleable. They're completely dependent upon the founder or the person that owns the business, and it's other than the customers and the plant and equipment. There's not a lot of goodwill in the business, so it's personal goodwill rather than business goodwill, which happens a lot. But there is a way forward, but you've got to want to do it too. And a lot of small business people, don't want to make that investment. The other thing that I see, which is fascinating, is people don't know what they need to retire. They don't know the number to retire.
Right. Yeah.
And that's an interesting process to go through too, which we take the clients through. What's the number they want?
Mm.
And quite often,
but it doesn't go, whatever that number is, doesn't equal the price of you or the value of your business, right?
it may.
It may. Yeah.
It may. I mean, you actually get some people that, I had a client that had $5 million sitting in his bank account in his business, and we did a analysis, and we said, look, you don't need that amount of money. It's a risk having it in the business. And he just looked at me and says, what am I going to do with it? Yeah. What am I going to do with it? So, I mean, you get the exceptions.
Yeah, no, you do. And I'm being a little bit cheeky, but, there's, the small business owners, there's hundreds of thousands of them. I think a lot of them have, the business has been okay to good for them. As you say, there's a lot of personal goodwill in there.
Yeah.
To move from that to something that's sellable to somebody else, it's an opportunity for somebody else, does require an investment. And you do that work with significant family businesses. I do that work with a lot of owners, and it's, it is an investment of some money and some time, but the payback, is that you can at least, usually you can establish a baseline for, if you had to sell tomorrow, what would you get? And sometimes that is a bit of a shock, but also a fillip to say, well, what can we do to, because I need X dollars to retire, and I thought I had it covered. I don't.
Yeah, look, you've spot on. So part of our process, when we go down the track of putting an advisory board in place after we've done the strategic plan, is to get a valuation, get an indicative value. And then we look at, we'll ask the valuer or the business consultant, what do we need to do to increase that value? And it quite often it will mean we need to restructure the business in some way to appoint a general manager or someone there to replace the key person, so it is transferable to another business or to other investors.
Yeah.
So.
Yeah, and I think a really healthy part of that, of any of that diagnostic or pre-selling work, is to also look at the business internally, but also map where that business sits in its broader industry. And there are some industries that are really alive, getting approaches. There are others that there might be an obvious home for it, even but you just need to. You need to establish some of these things, and it doesn't mean you go and knock on their door straight up, but it's putting a line in the sand by saying, this is what your numbers say, this is where you're short, and here's some options to maybe increase value, maybe to get a sale away on some basis that at least frees you up to do what you want to do personally.
I think you should get your business ready for sale all the time. You should be ready to go, and that takes an investment, but it sharpens you up in terms of what you need to do in your business. And it could be, simple things about your trading terms, those sorts of things, trademarks in place, all those sorts of things that, that if you do get a knock on the door, you need to be ready. So I think, an investment in terms of getting a valuation done, get an indicative value and saying, well, what do we need to do to increase the value? Where is the low-hanging fruit, to do this? I mean, if you don't sell it, you're going to make more money. And quite often you're de-risking the business as well at the same time, which is a great outcome.
It is a great. You went through that, twice in terms of a dance where and you came out better for it. I mean, you spent a lot of time and effort, but you probably would say you came out better. And I think that's it's the same logic, that this work that we might call exit planning, we might call business sale readiness, whatever it's about improving the sellability of the business, and therefore it's also, as you said, it de-risks the business. It probably, if done well, introduces the opportunity that maybe I can hold this business and put a manager in or do something or to keep it, because at least the business is running a bit more closer to its potential.
Yeah, and that's basically what we did. We basically we were able to bring in, quality people and share equity with them and kept them, and then we grew the business, we grew the pie, and was able to create something that was quite valuable by doing that. Whereas if we had have just kept it, the two of us, it probably would never have reached the size that it is now.
Yeah, but would you have been? I suspect not, that you wouldn't have been satisfied just to run it, like that. You had probably always had a bigger vision for what you wanted to do.
Yeah, look, it was always. I'm an entrepreneur more than an accountant, to be honest. I mean, I just look for the opportunities in terms of creating assets and wealth, and this has been a great outcome for me, as it is for most business owners. I mean, someone said to me, if you're not growing, you're dying. And I believe that. I think you need to grow, and you need to create an exciting environment for people to work in, for them to grow. And, if you can create a business where people are growing and thriving, servicing your customers, it's a pretty good environment to work in.
Yeah.
Whereas if you're just doing the work, I mean, and you need to do that. When you're starting, you just need to do the work. You're just working, we were working 7 days a week, hard work. But, we don't work 7 days a week now. I'd say we work differently. But it's more of a corporate structure than a sole practitioner structure.
Yeah. So for an owner listening, thinking I'm in the woods, I'm in the weeds, and I can't see any other way out than just keeping on working. What would you say to them about how to poke their head up? And I mean, you talked about using mentors and advisory board, but what are other ways?
I can't believe the quality of the people I've been able to attract to mentor and be on our board over the journey. I mean, if you look around for the best people you can find that are in your industry or just good business people, approach them and say, well, would you mind mentoring? Can we catch up once every 3 to 6 months? Pay a fee if they want to charge you. It's the best investment I've ever made. Probably the biggest mistake I made is that I didn't do it early enough. Right. I've probably only done it over the last 15 years. Probably, we put our first business coach on 23 years ago, and he helped transform our business.
Yeah. So you've used coaches pretty early on in the business life, right? So you've appointed yourself as CEO. You've engaged and used advisory boards, and if you don't know what an advisory board is, it's it's a less structured board that you might public companies have boards and for governance and strategic direction, and advisory boards are being increasingly used by smaller private businesses to to help guide the business towards to bring in some external counsel and an external perspective without the formalities of a board.
Look, it's pretty lonely being a CEO. It's probably one of the loneliest jobs you can have, and I think that I have mentors, and I also have a board, and I've had advisory boards. I mean, the advisory boards usually go into a statutory board, but basically what you're doing is you're just increasing your network of people around you that you can draw on. Yeah. So a problem that you have in your business, you're sharing it across your whole advisory board, and those people are advising you. They're not making the decisions. They're just advising you of what and guiding you of what you should do. And I found that invaluable. And it's been able to really accelerate our business. And as a CEO, I've grown by having those people around me, absolutely, without any doubt.
Yeah, to open up to share what your aspiration is, and to realise that there are others that can add value to that. I think even outside of a formal board, an advisory board, and even mentoring and coaching, I think sometimes putting yourself out and talking to other business owners. There's a lot of forums where you can go and do that. Now, I'm not saying they're all the right forum, but there are a lot of other business owners out there that can, just share their own experiences, which you can get a lot from, and it could be just pure in a pure, business networking environment.
Well, I was nearly 10 years with the AO Entrepreneurs Organisation. I got incredible support from them, and Family Business Australia has a forum group just specifically for family business members.
Yeah.
Look, I look back. I mean, I'd go to those meetings once a month, and I'd be flood as attacked because of staff issues that were that normally are everyone's got them. If you're a CEO, that's what you're doing. You're dealing with people issues a lot.
Yeah.
But to be able to air them with other entrepreneurs, it's incredible, and they don't give advice. They just share experiences, which is fantastic. And I love I still very good friends with the guys that I was in EO with. Who how we've met. Going back a while ago.
Yeah, and because there is a shared understanding. As you say, it's lonely as a CEO or a business owner. It's very challenging to talk to staff, employees. It can be really difficult to take those issues home and talk about them. Not in every case, but so another business owner or CEO will likely have experienced some or all of what you're going through, and better to try to look for a way to to tap into that.
We've all got similar issues. It's it's family. You're dealing with family issues at times. You're dealing with business issues, which quite often are staff issues. How to deal with personalities, partner issues, shareholder issues. I mean, you're able to share that, and then there's your own personal health and well-being that you need to be mindful of as well. And if you're not well and you're not fit, you're not eating healthy and keeping fit, you're not going to be able to perform as a CEO. And a lot of people forget that. So that's what an EO brings. It's a total sort of support mechanism. And I got enormous benefit, and I'd recommend anyone, CEOs, or if you're in a family business forums, you don't have to be a CEO to be in a FBA forum. You just need to be in a family business, and you're going through the same issues as what we all do.
And even if you don't call yourself a CEO, if you're running a business and you're responsible for all of the decision making, you are, for all intents and purposes, the person in charge. And we use that term CEO, very broadly, but it's applicable because you cover sales, marketing, operations, finance, everything really. And to I love the step you took out of being a partner to being a CEO with it and having an eye across the whole business. And there's more to it in any business. Doesn't matter whether it's an accounting firm or a manufacturing firm. There are departments or divisions or units, and you can't. You've got to give attention to them all.
Yeah. See, the step from being an owner operator to a CEO is a big step, but really one is internally. I mean, when I appointed my office manager or general manager, I basically delegated all the internal operational areas to her. It freed me up enormously so I could just focus externally on the business and on our people. And that was a massive step for me and I think the business. And, it's an important step to make. So you're asking in terms of what you do as a transformational for business is probably that step in a lot of cases.
Look, I did want to also, a lot of owners have their current trusted advisors, be it an accountant, a lawyer, a financial planner, a coach. But it seems to me that there can be situations where that trusted advisor, may or may not be the right advisor through a stage of planning and getting ready or considering your options around selling. What's your comment on that? And the need to potentially shake things up and talk to specialists or different advisors?
Well, the question that I'd ask if I was a business person looking at an advisor is just ask the advisor what experience have they had in particular circumstances. Have they acted in mergers and acquisition area? I mean, what transactions have they been personally involved in? I mean, it's one thing being an advisor and it's another thing actually living it. A good advisor will understand the trauma that you go through when you're selling a business, and not many, unless you've been through it yourself and you've run shotgun with your clients through that process. I don't know how you can read it in a book. You've got to actually live it. I used to get a phone call 4:30 every Friday during the transaction that we did with AZNGA from my advisor saying, "How are you going, Ken?" Because he knew that, it's your baby. You've got a lot of, you've got 30 odd years, blood, sweat and tear tied up in a business. You need someone that's watching your back and watching you personally, because you'll go through enormous, emotional troughs
ups and downs.
It is incredible. And you need the right people in your corner. Not only from an advisor, you're good accountants, and good lawyers. You need a whole, and it's not so much getting the best price. Yeah, I mean the price should look after itself if they know what they're doing. It's getting the deal done and getting the terms of the contract that are acceptable to you. I think that's what a good advisor will bring. Because quite often, you'll get approaches. I've seen businesses, where we've been brought in too late and they've fallen over, and the advisor really didn't know what they were doing. And they'd approached a potential purchaser that were just sharks, and it was never going to happen.
I think it's the biggest untapped area for improvement is manage as an advisor, understanding what a good outcome for your client looks like financially, but also personally for the team, for life after, and this guy, your advisor checking in every Friday at 4:30 is an example of someone who understands what an emotional roller coaster it is, and that they understand the games that get played to put you off and to test you, and when to bite, when to not buy it. So yeah, invaluable. But beyond, it's a good price. Is it a good deal? Is it still the deal you want to do? So it's vitally important to be able to talk to someone who can give you that perspective as well.
There's a fair bit of preparation to get to that point before you even enter into a transaction. And I think we've discussed that you need to be ready. You need to know what the number is acceptable to you before you get into that transaction. Otherwise, you're wasting a lot of time, and you're wasting everyone's time as well.
Yeah. Ken, look, it's been a rich discussion. I particularly like you're able to bring to the discussion your experience as an advisor, but also as an advisee. You've been through the ringer a few times, and you've completed a very significant transaction, and so you have seen both sides of it. This podcast, my reason for doing it is to try to encourage the owners out there who are, for better or worse, are chugging along and know deep down that they're not doing something they should do, about considering, the impact if they don't prepare to sell or be ready to sell. It doesn't mean you're going to prepare and sell tomorrow, but just to have that sense of readiness and awareness of what your options might be. You got any closing comments, suggestions, advice about how to poke your head up out of the weeds? And
well, I would say start with trying to identify who a corporate advisor is that can help you at least understand what the value of your business is and what you can do to improve the value. And that would be the first step, I think.
So a quality broker, a corporate advisor.
Corporate advisor, yep.
Yep, someone who deals in that stuff day to day.
And start with evaluation. What's it worth? I mean, and that'll either shock you or and in most instances, people overvalue their businesses, what they think they're worth. I mean, that's just what happens. But then you go down a track. Well, what can we do about it? How can we improve it? And that's, it's a 2 or 3 year process to do it properly. And it may well be that you need to, you definitely need, I think, the document will sell your business as your information memorandum, which comes out of your strategic plan. So you need a good strategic plan. You need to know where you're going. I mean, that's your roadmap for the future. So, there's steps that you can take. You don't need to be in sale mode, but that investment's well worth it. Because you'll get it. If you're not getting increased profit and increased cash flow, then you're doing something wrong. Just by having someone externally look at your business. We were fortunate; we did it twice, where we were approached and we were forced to do it. It was disruptive. It's very disruptive. But just I look back, it gave us incredible understanding of what the market was and what we could do with our business and how attractive our business was to others. I mean, that was the humbling thing about it too.
Well, humbling and also very informative, right? Because it really painted you a picture of how someone else sees the business.
Yeah.
All right, Ken. I think that might be a good point to finish on. It's I said earlier, rich discussion on really pragmatic issues and that we all need to deal with. So I really thank you for your time, and wish you well. What's your role?
Well, my role now is mergers and acquisitions and sitting on advisory boards. So I'm on a number of advisory boards, and that's where my focus is really business development, but mergers and acquisitions for Matthew Steer.
Yeah. Okay. Well, wish you well. If someone wants to reach out to you, Ken, what are you happy for them to do that?
Yeah, reach out for me through LinkedIn or my you can get me through the web page at Matthew Steer, Essendon Fields. So happy to take any calls or point people in the right direction. Happy to do that.
All right. Thanks so much.
Thank you very much. My pleasure.
Cheers, Ken.
Thank you.
Well, I hope you enjoyed that episode of Small Business Banter, and I hope it was helpful in you getting the most out of your small business ownership. To subscribe or listen back, or to check out any of the resources or information we talked about today, head over to the website smallbusinessbanter.com.au, or if you want, search up Small Business Banter on your favourite podcast player. Don't forget to subscribe, and if it was really helpful, I'd love it if you told another business owner about the podcast. If you thought it was exceptionally helpful, then how about you leave me a 5-star rating? If you think I can help personally, please reach out to me, Michael Kerr, via the website. There's a new episode out every couple of weeks. We'll catch up then.